These entities have become all the rage. I do a talk at universities all over the place called Profit with a Purpose, kind of talking about like as a young graduate or soon to be graduate from college, like why would you start any venture that wasn't about making the world a better place in some way, not just pursuing profit? And consumers themselves are becoming really interested in the products and services and how they're made. And I have friends who like won't buy certain pairs of shoes because the factories are, and have bad conditions in them, things along those lines. And so a lot of these social enterprises being set up are kind of done for marketing purposes, but then they're also being done by businesses that are trying to attract extraordinary talent to come and work with them. And there's a lot of examples of, Burton snowboards and finding early snowboarders in Patagonia with outdoor adventurists, things like that, where this could be a way to have a corporate culture that would be a differentiator in the marketplace kind of thing. So they could attract wonderful talent. And many startups are short on cash. And so what they need to do is find people who are passionate about what they're doing, who are willing to like work for meager wages and eat ramen noodles every night for dinner kind of thing, in hopes that this might be a success, but they're also passionate about the good that might come about because of this product or service being brought into the world. And what's interesting too is that for the first time, we've had a real big change in how our private foundations are dealing with things. So typically, when you look at the road of like what should be a for-profit versus a nonprofit, nonprofits are primarily formed because they want to be able to raise money through tax-deductible gifts from individuals or private foundation support. That's not going to change kind of thing. But many of the foundations today are looking at the value of the actual assets that they hold, for which they typically just take the profits from those assets and give it away. So a typical foundation today, which might have very, very large amounts of money, is kind of like old money. And they invest that money in the stock market. And the stock market includes whatever you think are bad. Gun companies, missile companies, polluters, whatever it would be. And then they take the profits from those performing of those stocks and they give those away. Kind of thing, and hopefully do good. Today, they're looking at what if they took those in the dollars they're holding in trust, basically, the corpus of their trust assets, and investing those in companies that only do good. Or that don't pollute, or that promote clean energy, things along those lines. And so we've had two really big entrepreneurs. One is the Case family, founders of AOL out of the Virginia area, setting up their own impact investing kind of fund. And the second is Mark Zuckerberg, founder of Facebook, and kind of famously, a little less than a year ago, said, I'm going to give away $2 billion. He's not doing that out of a private foundation. He has an LLC that's making investments in for-profit businesses that are going to achieve what outcomes that are going to make the world better that he thinks are important, or his foundation, not foundation, that his fund would think that would be important. That is such a fundamental shift from what was happening before in the past, that organizing a business as a social enterprise. One is you might be able to attract much better talent to come and work for your organization. Secondly is you might be able to differentiate yourself from your competitors when it comes to selling your products or services. But more interestingly, you might be able to actually receive investors who are really friendly, that are not just interested in getting some sort of 7 times return within 3 years on their money, but instead also getting all these good things that you might be able, good outcomes you might be able to achieve in the world. And having an investor like that's a true partner, might be a better way to go for a lot of businesses. Also, if you're one of the first, as an entrepreneur today coming out of school, this window is going to close when this is really novel and interesting. And that this would be the time to try to capitalize on this new trend while this is being worked out.